Okay, welcome everyone. We have our November 13 hybrid meeting for ESS Coordinating Committee this morning. And we'll do introductions. I'm Ann Ditzworth, chair of the group, and I'll let those in the boardroom introduce themselves since I can't see you.
I'll start and go around. Lisa Long, Iowa Land Records.
Natalie Steffner, Des Moines County.
Lynn Goodchild, Plymouth County.
Case, Grundy County, and today with this, I brought along Jesse Huthman. He's my IT director. And apparently at their last meeting, he was voluntold that he's going to be their new rep on this board as of first of the year, I think.
Yeah.
So he is here to immerse himself into 180 pages.
Jamie Stargell, Adams County Reporter.
Stacy Harridge, Story County Recorder.
Samantha McMahon, Iowa Land Records.
Project manager.
You want me to read the people online? Bob Rafferty.
Yes.
David Erickson.
Here.
Okay. Melissa Bonson, Cedar County, Nancy Booton, Lee County, Nick Lanning. Bob and Nick are part of our government relations team. And that's all.
Okay,
And
welcome all.
Kristen Delaney Quill.
Very good. Couldn't do it without Kristen. Thank you. Let's move right into our coordinating committee meeting summary from August. Any questions, comments, corrections?
Move approval.
Motion by, I think, Travis. Could you say your name? Because I'm sorry, I can't.
Will do.
Second by Jamie.
Thank you. Motion and a second. Any further discussion? All in favor, please say aye.
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 Opposed, nay. Okay, the motion will carry. And we'll move to our 2026 meeting agenda or proposed meeting schedule. There are 4 dates on your screen in your packet. The only question I had, and I won't be a member, but this year in August, we met the day prior to ISAC, and I didn't know if you wanted to consider that for next year, but that would be the 18th instead of the 13th in August. So
That's
point of discussion only.
I would just say in terms of picking the recommended dates, we tried to follow the pattern that we have for I don't know how many years. And then the way things are structured, the subcommittees, the finance committee would continue to meet monthly. They approved their meeting schedule at their do we approve it or are we going to act on it at the next meeting? I forget that.
We approved
I
it.
believe that was approved.
We have a schedule for the finance subcommittee. We have a sense of what the standards committee schedule might look like, which would usually occur the month before the ESS meeting, so that there is time for planning and communication. So this does follow the pattern from prior years, but really is totally up to the committee. If you would prefer to make an adjustment in August to correspond with the ISAC meetings, that is certainly possible to do. So is your meeting your discretion?
Can we always, I mean, do we need to do that today? Or can we see what, maybe the agenda is? My only issue with moving it was that, like, I had another committee meeting I had to miss last August, because we had this meeting. So, we can always change it.
Absolutely. This is intended to kind of lay out a roadmap, and as we get closer, when we get into February or May, if you need to make an adjustment, of course you can.
It worked for me well because it allowed me the opportunity to attend in person. It's just too far to go 2 weeks in a row. So if you have outlying members, that would be a consideration, but just a comment. Okay, so if you do want to approve this as presented, and then you can change it as you want in the year ahead. I'll take a motion.
This is Mel. I'll make the motion to approve as presented.
Okay, is there a second?
Jamie, I'll second.
All right, motion and a second. On the floor, any further discussion?
I
Okay,
just
all
want
in,
us to keep, this is Jamie. I just want us to keep an open mind that we may need more meetings next year after March as well to get our new project manager up and going and make sure that we're there to support them.
Great. I agree.
So please keep an open mind for that.
any other discussion? Okay, all in favor, please say aye.
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 Opposed, nay. Motion carries, and we'll move into the committee terms of office. This chart shows what we have coming up. The exec committee did meet this week and nominate, so those two on the bottom there, the other term expirations pending are not pending. As introduced, thank you, Jesse, for joining for ICIT today. He will be, was approved by the exec, and Jamie was approved as the ICRA exec representative. So the only one remaining in question, was there one? No. District, nope, that makes it full. So are there any questions or further discussion on that? With those notes, is there a motion to approve? Oh, no,
I
we
would
don't
just
need a
say,
motion. No, we don't need a
tech-
motion. That's not an action item. So
Yeah,
financial
technically
reports then.
speaking. Yeah, technically speaking, you do not need to act on this. The executive board of the association is the one that takes the action. And I think, I think the only thing that would be good to have is, maybe to have the executive board pass on, the minutes from the meetings to us, just so we have that in the record that those appointments were made, but,
Okay.
other than that, I think you're good.
Jamie, if you could do that, that would be great.
Thing to be approved. Yes.
Thank you.
Okay, so on to the financial reports, which were discussed at the finance meeting for those who are able to attend. So you may have heard this, and it can be fast and swift this time.
All right, money
It's a lot
market
to say.
interest. Money market interest income, year to date is $17,767.49. If this is from the money market account that we set up almost a year ago, with Bankers Trust, this is used to offset the banking account fees that we have with Bankers Trust. The bad payment fees are up a little bit this year compared to last year at $455. This account is used to account for the $35 chargeback fees that we push onto the customer if they charge us back or have a bad payment. Service fees for e-submission are at $868,891.40, with Fund 255 reimbursement at $387,679.18. Local service provider maintenance fees are down this year, but just as a reminder, these are for the last 6 months of 2025. And starting in 2026, this will move to a calendar year income and expense. Total budgeted income for the year to date came in at $1,518,251.24, with revolving income at $30,617,765.57. With a gross profit of $32,136,016.81. Bank account analysis fees. This is what we are offsetting with that money market interest income. They came in at $11,927.07. So overall, a difference of about $6,000. So it's not a huge income, but prior to setting up the money market sweep account, we were spending more than this every year or month. AccuSoft Prism, this is a normal expense that you see every year. Last year, we were not able to move it back to budgeted expenses until, I believe, November or December. This year, we were able to move it back to budgeted expenses from the reserve in the middle of 2025 at $25,050. And then the DB2, we were also able to move back to budgeted expenses earlier in the year at $11,476.08. With total budgeted expenses for the year to date at $1,254,490.76. Back file redaction charges for the year to date are at $18,174.90, with total reserve expenses at $203,442.76. Revolving expenses for the year to date are $30,621,992.69, with total expenses at $32,098,101.11, with a total net income of $37,915.70. Balance sheet as of September 30th. The BT settlement account has $711,700.88. Just as a reminder, this count is actually always zero at Bankers Trust. The amount shown here is the total of unreconciled transactions in the ESS accounting software. With the money market sweep account currently holding $1,236,032.98, with total assets and liabilities at $2,838,542.93. Profit and loss year to date for the Fund 255 account with a net income of $9,597.88. And the balance sheet for the Fund 255 account with assets and total liabilities equaling $884.77.
If I could, I'd just like to add a few colored commentaries. The first is, at a typical ESS meeting, we might have gone into a little bit more depth in terms of the quarterly reports. We have somewhat of a big agenda this meeting, so we're trying to minimize that. But I just want to acknowledge the presence of the Finance Subcommittee Chair, Stacy Herridge. The Finance Subcommittee, if you haven't been to one or you don't participate in it very often, they do go through all of the financial reports, the monthly, the quarterly, the year to date. They dig into the comparative expenditures from one year to the prior year. They go over the bookkeeping entries that are made each month to make sure that that is reviewed. The Finance Subcommittee reviews all of the bill payments that are made each month, as well as the credit card payments. And so there's a lot that goes into the work of the Finance Subcommittee. I mentioned this in one of the memos in your packet, but I'll just say it out loud, that, we have received some input that, we've done things a certain way for a period of time. The full ESS committee here has delegated quite a bit of work relating to financial oversight to the Finance Subcommittee. But that doesn't necessarily mean that, well, we've always done it that way. Things can be revisited. And so we are going to be setting aside time at the December Finance Subcommittee meeting to kind of review all of the practices and procedures, how we review things, how we publish things and whatever. And I think it's important to just say to the ESS committee that you have in fact delegated a number of decision-making functions to the finance subcommittee, particularly in the review of expenditures and payments, things like that, so that you don't have to do it at each quarterly meeting, which would be even more time consuming. But you know, it is something that could be revisited. So I just want to make sure this is sort of an opportune time for the ESS committee to give some discussion, give some thought, and then communicate with Stacy and the other members of the finance subcommittee if there are things that you would like to be handled a little bit differently, if you want to make adjustments in communication in some way. You know, please take this opportunity to do that. It can be a very substantive thing, like, you know, you don't like the fact that we put money in one reserve over another or anything you want to talk about. Sometimes it's going to be just procedural. So, for example, we publish in the finance subcommittee packet every single month, the entire bank statement, okay, which is 90% of the size of the packet because we do so many transactions, it's a long document. Do we need to keep doing that? Should we approach that in a different way? So I just want to reinforce the invitation to the ESS committee that if you have ideas about changes and improvements, this is a great time to do that. And you don't need to take time to discuss it today. You can if you wish, but the review is going to be underway in December. Your input would be very welcome.
Are there any questions or other comments to make on the financial reports? If not, if there's a motion to approve, I would accept that.
This is Natalie. I'll make that motion.
Is there a second?
Travis, I'll second. Second, Travis.
Thank you. Any further discussion? Hearing none, I'll call the motion. All in favor?
Aye.
Any opposed? Please say nay. Okay, motion carries and we'll shift into the ESS financial and strategic review discussion.
Thank you. I just have one main thing to talk about, and then I have invited Bob Rafferty and Nick Lanning to be here to add any additional commentary about what the potential future might be. Two main messages for me. One is that 2025 has been a remarkable year from the standpoint that if you read the headlines of the Wall Street Journal or any number of financial publications, you might have the conclusion that we're sort of in a very volatile economic market and that you see how there are articles about people having difficulty getting loans or they're being priced out of houses because they're too expensive or the interest rates are too high. We have a president who is advocating for the creation of a 50-year mortgage. There's a lot of stuff going on. And so you might conclude from that, man, this is probably putting a real damper on recording activity. And the fact of the matter is, to our surprise, that hasn't really happened. In fact, 2025 is going to end up being the second or third highest level of electronic recording that we have ever had. It, from that perspective, has been a pretty good year. And so each time we come to a quarterly meeting of the SS committee, we've sort of taken stock and said, okay, we accept that good news for the prior quarter, but then we keep our conservative posture for the next quarter. Okay, that's what we have done throughout this year, and I'm doing it again. as you look at the amendment for 2025, I'm not getting overly exuberant about what November and December are going to look like. Although anecdotally, we observe that November continues to be a very good recording activity period, both in terms of traditional recording and electronic recording. So as we look ahead to 2026, we're maybe in a bit of a quandary from the standpoint of natural instinct should be to be very conservative, but the reality is things continue to look pretty good. And on that basis, I think you could fairly conclude that looking at potential revenue numbers in 2026, I'm probably more optimistic in this budget in that regard than I have been in the last 4 years. I'm sort of accepting yes for an answer, right? To say, okay. And part of the thing that drives that is that, you know, we desperately need to fill our vacant software developer position. We've been holding tight on that and we just can't go any longer. I've said repeatedly we need more than 3 developers, and we've been living with 1.5 to 2 for most of this year. It's been hard. And we haven't really gotten that much cool stuff done either. As I look ahead to 2026, and recognizing that in 2025, we have had the opportunity to accumulate additional resources to the tune of about $200,000 to $250,000 that we did not have in the bank last year. So I am making some recommendations to spend some money here in this meeting, but not big expenditures, not huge expenditures. So I think we're going into 2026 budget with a more optimistic posture from a revenue perspective, but we're also keeping more in reserve in case it doesn't turn out that way. That's sort of the mentality of the budget. But you know, you can wait for the other shoe to drop and it never drops, and then you kind of miss the opportunities to do things that you should have been doing. And that's why I'm saying this budget has been put together, sort of saying, I take yes for an answer, particularly on the revenue side. Then the other thing I want to make sure everybody understands is that we did not base any financial assumption on the idea that some bill will pass to increase fees. We're assuming current law here. We are not taking anything for granted, and there's nothing about a fee increase that is built into the 2026 budget. So to me, that is sort of the explanation of what's our strategy as we put the budget together. Now, that doesn't mean we don't look to the future, and that's why I have invited Bob and Nick to join in, maybe to just share a little bit of insight about kind of where things stand with the legislature and with our stakeholder groups. Um, uh, I don't think they have all the answers, but they might have some insight. So I would appreciate the opportunity to defer, particularly to Nick, to add some comments in about, you know, what the prospects are for the future.
Yeah, good morning, everybody. Nick Laning, lobbyist for ESS and the county recorders in 2026. So appreciate working with you all and the work we've done together. I just, you know, there's a lot of moving parts going on right now with the legislature. We just had a leadership shakeup. We have new committee chairs all over the place, to put it lightly, I guess. And you know, we have a state that's facing a substantial budget shortfall and deficit. And they want to talk about property taxes and local government, as you all know. On the fee in particular, so we have House File 1031 from last year that passed the House. It sits in the Senate Ways and Means Committee. We have made a request with the chair of that committee, Senator Dawson, to reassign that bill so it can be considered for this next session. But we continue to know that we have stakeholder groups that continue to say they're not sure about the size of the fee. And we know a couple of senators in particular last year had expressed concerns with so much money going to the counties. So those issues have not gone away. So just putting those out there. But we do also know that there is some discussion with some of our stakeholder groups. We've had conversations with the bankers. No number has been set, but there is a openness to what they continue to call a reasonable fee increase. So we'll continue those lines of communication. We know this is a heavy lift, and I would be remiss if I didn't add the other big elephant in the room, which is the DOGE report. And discussions on merging the treasurer and recorder's office. We've heard discussions that there could be a more general consolidation bill out of the Senate for county government. There could also be proposals just strictly on this, or a proposal to move the recorder's office under the treasurer's office. So that we're hearing things all over. I will say the House does not indicate as much interest in the DOGE report as a whole or this topic as much. But that's not to say that if something comes from the administration or the Senate, it's something that will have to be taken seriously. And we've heard from a couple lawmakers that, all right, so we have a fee increase over here, and then we have this discussion of merging or changing the recorder's office, and those seem to be going in opposite directions. So there's a lot of work to be done. We'll continue to work with the ICRA legislative chairs and leadership on what the next steps are for strategy with them. But from the ESS perspective, it's the conversations on the fee and the possibility of those, but there's a lot of factors moving around right now. It is unclear where that conversation will go in the Senate in particular, and that's where our bill sits. So this DOGE report has really shaken up the conversation on recorders, and then the fee policy in particular is the lay of the land right now. Anything you want to add there, Bob?
No, I think that's a good summary, Nick.
Are there any questions from the committee for Bob or Nick?
This is Natalie. I have a question. Do you think us, pushing and continuing the conversations with the stakeholders is going to backfire at all as far as the DOGE report?
I don't think so, but I do know I know that the stakeholders are aware of the DOGE report. Everybody is at this point. And it's going to be a discussion for the recorders. What are we asking of your stakeholder allies at this point? Is it the support for the office and maintaining the office? Is it for the fee increase? I think these are some of the things we need to discuss in the messaging of how we want to approach these issues going forward, because they really kind of are like this for lawmakers to understand. They're at odds with each other. Because I got to give this senator who said it to me, they are going in different directions. Do we invest more in the recorder's office, or do we merge the recorder's office? And those entities? Obviously, we will be fighting back against the merger and those sorts of things, and we've already been working on strategy and having discussions to that point. But I think it's how do we approach the stakeholders and your stakeholders, and what is the ask going into this legislative session?
Thank you.
I do have an additional comment I want to make before we move on, but are there other questions or comments from the committee? My comment that I would add to what Nick and Bob have described, I don't, I agree with their analysis, and so I don't have any quibble with that. But I'll go a little bit further and say that there was a hope that some conversation with stakeholders might lead to some sort of collaborative conclusion about what would be an acceptable fee increase. And it appears that that is just not going to happen. And that's because the stakeholders are just not ready to, plant a flag in the ground and say, hey, I would accept this number. It doesn't appear that any of the stakeholders are prepared to do that. So that means that you reasonably know for certain that what's out there right now in the House bill is not going to fly because of various views about, is it too much? That seems to be the message. But then at the same time, you're sort of hearing, well, there would be some room for accepting a reasonable, but you have to figure that out. We're not going to do that for you. Is kind of what they're saying. I may be oversimplifying it. So probably one thing that has to happen if there's going to be a discussion about a fee increase that might have a chance is that it's probably going to have to be the Recorders Association having a discussion internally and saying, okay, here's what we think would be a reasonable compromise. You can still say, we're already being reasonable. Hasn't changed in 40 years. And that would be true, but that may not be enough. So a decision to make any kind of movement, I think, is kind of back in the hands of recorders. So, and that's a discussion that you all have to have. The second thing I would say is that associated with the base fee increase, we, as a institution here, if you want to call it that, ESS and our land records, are still going to be communicating that if there's not a fee increase, I have used the word tenuous on several occasions that, we only have 2 developers right now and we want to have our full 3 back, but we really feel we need more to do what everybody wants us to do. And even though 2025 has been a good year, it may not be enough in the long term, without an adjustment. And basically what we have said in our prior policy recommendation is we need an additional $2 per document. That's basically what we have said. And I think we're going to continue to say that. So hopefully, I have been very direct. I have been very direct in our communications with the stakeholder groups that the need for additional resources is real. And it has nothing to do with me because I'm moving on. But I'm appealing to them to say, this is a real ask and please take it seriously. And so, from an ESS perspective and Bob and Nick representing ESS, I think we're going to continue to express that point of view to whoever will listen. It may or may not be successful. So there's a very definite and tangible need that ESS and our land records has for revenue to do the things that people would like us to be able to do and to continue to be able to do. I mean, I would just go back to the fact that we're offering access online to 25 million records now we've achieved at no cost. that has a value, right? And if you want to continue that, then does require some investment. So in the background, we're kind of gonna still be saying that from a ESS hour perspective. And then the last thing I will say is that the stuff that's out there is very real, very tangible. Some of it could gain some momentum in a not so positive way, and it's going to require real work on the part of everybody to communicate with local legislators and so on about what needs to be done. So we're here today to talk about what we can control here in this room, but those are big issues out there that could very positively affect recorders and our land records, or it could adversely affect our land records and recorders. And so I would just conclude by saying the stuff out there really needs to be taken very seriously. But we're gonna act on what we can control within this room today. Bob or Nick, do you want to qualify anything I just said?
No, would echo the beginning part of what you emphasized. Yeah, it is clear the stakeholders will not support any fee increase near what we were pushing for last year. I mean, that was obvious with the stoppage in the Senate. But they've acknowledged that there's some fee which they did not want to throw out there on the table that they would be acceptable to them. So that's where we're at. But again, that also, whether it's, pick some number, you still have the other larger issue hanging out there of the DOGE report.
Yeah, the only thing I would say is those points are well taken, and I think we recorders we're here as a resource, and we're already working with Jordan and Julie to set up another discussion to plan next steps and what our strategy is going to be going into next session. So we're here to work for you and be your eyes and ears and your voice at the Capitol as these are two heavy issues that ESS and ICRA are going to be engaged on going into this session. So just know that we're here and happy to answer any questions or support you all in any way that we can.
All right. Thank you everyone for your input and updates. It is clearly a challenging time ahead, and I think we're on the right path. We're going to meet and we're going to plan and we're going to do our very best. So thank you for your attendance today.
Thank
If
you.
there is nothing further on that finance and strategic review portion, we'll shift into the ILR budget review and action.
Thank you, Ann. So in your packet, starting on page 15 and 16 is a memo that summarizes the recommendations relating to a proposed budget amendment for calendar year 2025, which will end at the end of this December, and then also a proposed budget for calendar year 2026. Sort of embedded within this is also a separate recommendation for transferring some of the money that was earned in 2025 into the reserve accounts, just as a way to allocate some of the earnings that were achieved. So we'll start with the calendar year 2025 budget amendment. If you go to the basically the depiction of the spreadsheet in your package, you can see that particularly as you scroll to the right and look at the months of October, November, and December, you've heard this before, but everything in orange basically we're converting or have already converted from budget to actual. The items that are highlighted in blue, particularly for September, are no numbers, but at the time we put the budget together, you know, they hadn't been fully reconciled or approved. September's now been approved, so you know, theoretically, you could convert that column to the burnt orange color as well. October may be done from a bookkeeping point of view, but we still haven't kind of closed that up. So, but everything you see in blue is, I would characterize as the equivalent of an actual number. And so the things that are really in play for the remainder of this year are those items in October, November, and December that are not blue. As we shared with the Finance Subcommittee, which, who, by the way, in their earlier meeting earlier this month, they did approve the recommended budget actions here, as I'll be presenting them to you. And so there are two adjustments in revenue that we're recommending. One of them is to make a downward adjustment in projected revenue from the money market interest income. As you may have recall, Samantha reporting, we do expect that number to go down a little bit because the Fed and others have reduced interest rates, and that's going to have an impact on our ROI. So the updated projected income from the money market account is $2,500 a month. And then the other change in revenue is that we have zeroed out income from the on-demand payment system. And the reason for that is that the only source of revenue for that was from Lynn County's use of a registration renewal position program application, and they have stopped using that application. If they stop using that application, that means they're not using our on-demand payment system, and there's no income coming into that account at this point. I'm not making any commentary. It's just a fact. They aren't using it anymore. They've made a decision to do something differently, and therefore we can project no income from that. Everything else that is a change is just a change from budget to actual. And if you look at the projected income numbers for e-submission and for the Fund 255 reimbursement income, we're keeping those numbers the same, and they're low compared to what our actual experience has been. The effect of that is that instead of projected income of $1,860,000, we're projecting income of $1,924,000 or $25,000 compared to the budget amendment that was approved back in August, meaning that that good experience in e-submission in particular has had a positive effect on the budget's revenue since August, and we're projecting revenues increase compared to August by about $64,000. Then, as you look at page 18 of your packet, where we get into the expenses, same story, things that are in the burnt orange or budget actual, and the same is essentially true for everything that you see in blue. And then everything that is white or unshaded is unchanged from the budget amendment that you approved in August. So what are the things that we're changing? Well, the first one is, if you look at the middle of that page, we're looking at purchasing computing equipment, refreshed equipment, basically for the administrative staff. We're conservatively estimating, it probably will be less than that, but conservatively estimating a refresh cost of $2,000 per staff person or or per device. So that would be true for Lisa's position. It would be true for Samantha's position. It would be true for Kristen's position and also Corey's position. Okay, so the total there, you can see if you scroll down, you can see the two customer service position amounts would be $4,000. Then, in addition to that, not picking on anybody in particular, but there have been some adjustments in the cost of actual positions, particularly on the administrative team, and that just has to do with decisions that have been made to switch HR providers from paychecks over to the new company called Connectify, but that also created an opportunity for benefit elections. So benefit election changes just are what they are. And some of the benefit elections are going to be more expensive. Nobody's getting a raise out of this deal, but there are changes in those numbers, primarily because of benefit elections. And that would affect both November and December. And so I'm now moving on to the third page of the budget amendment. And you can see that there is an additional $9,700 expense that would be associated with the third developer position, meaning that we're looking optimistically ahead to the end of this year, thinking that we might actually be able to fill this position before the end of the year. And so that $9,700 is to cover the compensation of that position. We haven't hired anybody, we haven't interviewed anybody. We don't know if the final number is going to be less than that or more than that. This is our best ballpark guess about what the cost of that position might be. And that number does carry over into 2026 when we get there. Then another thing that has changed is that you may recall that you approved a 1099 independent contractor agreement with Kelly Wallace to help us with the migration of our Linux operating system. And that has been successful, but we haven't burned as many hours as we originally hoped that we would, just because Kelly's pretty busy with his new and he's kind of working on weekends and after work, and there's a limit to that. So the reduction, the adjustment there is actually a reduction in projected expense because we just have to be realistic about the number of hours that he can spend on that project. It is a big project, but it makes sense to work with Kelly on that just because he knows it better than any of the rest of us. And Myrna would acknowledge that. So we're keeping that in the fold, and then you'll see that reflected for the first quarter of 2026 when we get there. The next gray item is related to the GB2 license that Samantha reported on earlier. We originally projected that to be moved back into the budget in December. We ended up doing it in October, and there's no change in the number there. It's just a question of when it occurred. Then, if we're going to be successful in hiring a developer, that third developer, they're going to need an updated device, just as we did for the other two developers earlier this year. And that cost is an Apple MacBook Pro. And what we spent on those was about $5,000 a device earlier this year for both Myrna and Nancy. We're going to need to do something comparable for whoever the new developer may be. And then if we get to the end of the year, we're going to be making a final payment. One of the top local land record management companies that serves only one county hasn't gotten their bill to us yet. So we're looking for them to get their bill to us, and that is reflected in that December number in the amount of $1,650. So other than that, those are really the only changes that we're proposing to make in the budget. The big changes are just moving from budget to actual. That's really what most of it is. So what is the result of that? Well, if you look at the last three columns, so the last three columns are the revised budget, basically, the budget that you approved in August, and then how much of that has changed. So we looked at the budget, and we're projecting, I want to make sure I get this comma in the right place. Looking at a net income for 2025 at the end of about $316,000. When you adopted the budget amendment in August, the projection was $231,000. So the net income for the year, August compared to now, is $85,000 higher than it was when you adopted the budget amendment in August. And that's just another reflection of the fact that, you know, things have been going better than expected for the current calendar year. So I'm going to stop there. I will answer any questions that you may have about the proposed budget amendment, which was approved by the Finance Subcommittee.
Just to
Hearing,
clarify,
go ahead.
Bill, we're planning on keeping Kelly as a 1099 into 26 as well through March. Okay.
Yeah. And you'll see that in the budget.
But the amount was reduced on that, is that the way I understood that? Because, but the amount, like budgeted for that, did you say that was reduced? Because
I did reduce the budget for November and December, and the number you'll see for the first quarter of 2026 is actually lower as well. And that's just a reflection of reality. Are there any comments in the chat?
There are no comments.
Okay, questions? Yeah.
well, I would make a motion to approve the calendar year 2025 final budget amendment if you're looking for one, Ann.
And
That's
this
great.
is Jamie.
A motion and a second. Is there any further discussion? Hearing none, I'll call. Is there a vote in favor? Please say aye.
Aye.
Oppose, nay. Motion carries, and we'll shift to transfer of reserve funds, I guess.
Okay, thank you. And I'm on page 177, I think.
Yeah.
Is that right? Of your packet? No. Is that
Yeah.
right?
20.
Page 20.
Okay, sorry, there was a carryover page number there. So page 20 is a memo from me to you and the Finance Subcommittee relating to recommendations and allocations to the reserve accounts. We're not proposing to move money between the reserve accounts. We are proposing to add money to two of the reserve accounts from the net income that we have earned so far in 2025. So the two recommendations are to move sufficient funds to increase the software development and equipment maintenance reserve from its current position at $327,307 to $450,000, which is historically kind of where we have tried to be, somewhere in that neighborhood prior to making investments into particularly external software development. And it does anticipate that at some point the ESS committee will authorize the use of that money for software development activities. And there is an item on your budget today to recommend to do that very thing. And we'll deal with that later. Then for the last number of years, we've sort of been trying to stay about $50,000 in the redaction reserve fund, because, you know, every month, more counties, they scan more records and they send them to us and we redact them, when necessary. And so we want to continue to be in a position to support that activity and not send the message that, hey, we're not doing redaction anymore. No, we're in business to do redaction for back file documents as well as our forward file documents. So we're just simply bumping that up from $39,945 back up to $50,000 to keep us in a good position and let everybody know that, hey, we're still open for business there. And please do that. We are not making recommendations to go beyond that at this point. I think we could if we wanted to, but as you may observe on the report in the following pages, on pages 21, specifically, um, uh, you know, I'm sorry, you probably think I keep repeating myself, but I am sensitive to some external parties who might say that we have too big of a reserve, that we're sitting on this big pile of money. Well, we have to maintain cash flow. We have to have enough money in the bank so that when we're waiting on ACH payment to come through, we can still make distributions to the counties. There are things that happen in between. You know, there's a glitch in the system, or there's a holiday that causes some delay, but we still maintain a commitment to have enough cash to do those distributions. And so you can see that, you know, there are times where in a week we will be required to distribute over $1 million, or oftentimes 700,000 or $800,000, and that's why we do it. So we think we have achieved sort of a good equilibrium by implementing the sweep account where we can earn higher interest on, but still maintain the liquidity when we need it. And I think that's about where we need to be. So just my background, that's sort of how the rationale is derived to say, let's move some into reserves so we have enough to do with things that we want to do, like development and redaction, but not so much that it would put any kind of burden or limitation on our cash flow. And I'd be happy to answer any questions. Your approval of the transfers as proposed is requested, and this was approved by the finance subcommittee as well. I would defer to Stacy if she had any comments to make.
No comments. I just appreciate, this is Stacy, the conservative approach as we have done for years and years. So I just respect that and I appreciate that moving forward.
I'll make a motion. It's Joanne. The transfer reserve funds.
Okay, there's a motion. Is there a second?
This is Jamie, I'll second.
Okay, any further discussion? All in favor of the motion proposed? Aye.
Aye.
Any nay can stay away. No, I'm sorry, my mouth got fumbled up there. Anyone opposed to the motion, please say nay. The motion carries and we'll shift to calendar year 2026 budget.
Okay, thanks, everybody. And you may, if you were checking your email this morning, I did send a quick update out this morning. And for those of you who are present, you should have the updated version in your packet. And I have to thank our fact committee member Natalie for leading me to this this correction, because she had a question about the change in the net income, which I'll talk about here, but that led me to realize that in putting the 2026 budget document together, there was an assumption that I didn't need to include the on-demand service fee or the MOU in the income column because we weren't projecting any income, but that had the effect of not putting any money into the 2025 column to show what we spent in the current year compared to what we're proposing to 2026. And if you have the right document, at least the one I have, I had highlighted those items. I don't know if that's in the, yeah, so the items that are highlighted are the on-demand service fee and the MOU. We aren't doing that anymore, so, but we did earn money from it in 2025, so that needs to be counted as part of the comparison. So let me just walk through the income numbers. And as I said, you know, what was the methodology? Well, the primary methodology was to look at 2025 numbers and say, what did we experience in this year? And then to maybe make some adjustments from there. So, you know, the averages really played into this. And so you see that for money market interest income, I've started the year at $2,300 a month, but I do think there's a chance that that interest rate and earnings should be higher than that. And I reflected that in some of the projections for July through December of 2026. For the point of sale service fee, if you look at everything, we're looking at kind of a typical income on average of about $10,000 a month. That is seasonal. It does adjust up and down, but I would note that we're actually projecting point of sale income to drop this year by about $31,000, just because we think there isn't going to be as much seasonal type of activity this year as there was in 2025. That is, you know, the cycle of boats, for example, is just different. So we're actually trying to be a little bit conservative in that estimate. Then for the e-submission service fee, we're projecting income of 1.16 million. I'm looking at this right. Yeah, 1.11 million compared to the revised budget, also close to about 1.1 million. We're projecting a $3,000 increase in e-submission fees. And essentially the story is we can think that we're going to be maintaining that level of activity through this year. Similar story for the $1 fee through Fund 255, estimating an average of $44,000 a month with projected income of $528,000 compared to what we've actually experienced this year of $517,000. So it's about a $10,000 overage compared to our actual projected experience. I think our ending number on that as we get into December is actually going to be pretty close to that number, as you may recall. I'm being somewhat conservative in my 2025 end of year numbers. And so another big aspect of income is related to our maintenance agreements. So something different is going to happen this year, and that is that we're not paying our service providers in July, we're paying them in January, which is also another reason to maintain some liquidity in our accounts, and that is based on the numbers that we had last year, plus the cost of living adjustment approved by the Social Security Administration. We're expecting to spend about $294,000 on local maintenance fees. You may recall last year that we adjusted the cost sharing credits to about $52,000, and that was because we were only covering half a year, right? Well, in addition to covering the same proportion as we did last year. We want to get back to closer to the historical levels of the cost sharing credits for the counties. So we have increased the cost sharing credit to $140,000 in this budget, which means that it's roughly a 50-50 split between the counties and ESS in terms of covering those local maintenance expenses. But the noticeable thing is it will happen in January. It's not going to happen in July this year. So let me stop there and just look at the summary. We're projecting income of $1,947,000 compared to projected income of the budget amendment you just approved of $1,924,000. That's about a $22,000 increase in gross income that we're projecting. I'd be happy to answer your questions before we move on to the expense side of the equation.
There's no questions. Are you looking at chat? Okay. No.
Okay, if you're ready to move on, let's move on to the expense side of things. In many things, line items in the budget, we're looking at incremental inflationary adjustments. You're going to see that if you look in column C or the far right-hand column of the change, that we're projecting a slight reduction in audit expense this year. And that's primarily because we are projecting that the Recorders Association is going to be able to pay for their own 990 return, that we will not have to cover that this year. And the reason for that is because we sort of have been through the period where we've worked through all of the income that used to run through the Reporters Association account, and now we're out of that. So based on what we know, the Recorders Association is going to be able to move to a simpler form, and it should be less expensive as well. We have a new line item here, and that is for the ESS director. So if you look at the, and that may be called something else, but we're calling it for the better purposes, the ESS director. And we're projecting expenses of about $173,000 for calendar year 2026. Now, keep in mind that in the months of January and February, we'll probably still be in the midst of a search process. So there are no expenses for that position in January and February. But we are projecting that it could happen in March. And so for that 1 month of March, you'll be paying for a director and for me during a transition period. Okay, but then if things go as everybody hopes, that will end at the end of March, and then the director's position will go forward. Then, if you wonder, well, how did I calculate the number for the cost of the director's position? And essentially, I took a conservative approach from the standpoint of not wanting to underspend on that. So if you look at the position description that we have put together for circulation, it assumes that the high end would be somewhere around $175,000. Then, because this is going to be an employee, not a contractor like I am, I added 20% to that expense to make sure we're covering benefits and so on. So if you kind of do that monthly amount and divide by 12, and most, you know what I mean, the actual cost per year would be higher than that. That does not mean that's where you're going to end up. Okay, there's a search to be done, and there's unknowns out there, but we wanted to make sure that the budget covers that position, and that is the methodology that we used. You'll see below that line is equipment for that position, and I've estimated $5,000 to purchase the equipment that the new director is going to need, because the project doesn't provide my equipment. I provide my own equipment. So when you hire that person, the project is gonna have to pay for that equipment. And then kind of going on down, when you move down into the professional fees category, you see that the expense associated with my contract extension is covered in January through March, but then that zeroes out for the remainder of the year. Okay, questions about that before I move on? Okay, then moving on, you do have an item on your agenda that actually comes up immediately after we adopt the budget, and if you want to switch and do that first, you can. But the legal fees are associated with the retainer for the Brick Gentry Law Firm, who Paul Gray and Sue Brick were here, I think, in the last meeting to reintroduce themselves to you guys.
Paula has joined the meeting.
Okay, Paul, stand by. As soon as we're done with the budget, we'll get back to you. We have worked with Brick Gentry for many years, and it's always been on a retainer basis. If you look at the agreement that we have with them, if we ever had to have litigation, then some new rules would apply. But they're a phone call away. I meet with them reasonably frequently to get advice, and so the engagement proposal that is before you today, which we'll act on later, is basically keeping the monthly retainer rate the same in 2026 as it is in 2025. The next item down, government relations, you previously have approved an agreement with the Rafferty Group for their government relations services. The actual budget number is less this year, and the reason for that is because we're kind of jointly supporting that between the association and us. So for ESS, our actual cost for that is going down compared to what you expended last year by about $5,500. The human resources expense is what we paid Connectify for the HR services. This is a fee that is charged per payroll, per employee, and we just did the math, and these are the numbers that we came up with. You'll notice that for the employees and for HR, the numbers are higher in May and October, and the reason for that is because there are 3 payrolls in those months. That's the only reason those numbers are higher. So now we're down to insurance expenses, and I am projecting an increase in insurance costs. Actual cost this year was around $45,000. I'm projecting $50,000 in insurance expenses. This is for your errors and omissions in insurance, and the directors and officers insurance, and liability insurance. That's what we purchased the insurance for. I don't know for sure that it's gonna go up by that much, but I'm recommending that we allow for that, based on our prior experiences. Next one down is the ESS meeting expense, and we're projecting about $1,200 a meeting. We haven't had as much in-person attendance in recent periods, so the cost has been a little bit lower, but if everybody showed up with the mileage reimbursement rate that we have, plus lunch and other ancillary things, that $1,200 is about where you would be. So that's what we put in the budget. The next thing down, we're moving into office operations. Your monthly rental expense, if you will, has been $3,050 for some time. I will tell you that we're going to be very actively seeking alternative space for the ESS operation. And I am projecting that you are going to be paying more for that as you go forward. So it does increase in April from $3,000 to $4,200. Obviously, we and you are going to try and be as economical as we can be. But $4,200 is actually closer to what break-even costs are. And so I'm going to be realistic as we make that projection. Other things like office supplies, publication expense, postage, those things are just inflationary adjustments. Telephone, just as a reminder to provide independence for ESS, you are using a VoIP phone system that Lisa and the other members of the team will just be able to unplug and take to the new office and plug into the internet without having any effect. So that cost is expected to have some inflationary adjustment, but otherwise the same. You're paying, you're contributing about $250 a month for internet services here. I'm projecting that you'll pay about the same wherever you end up. Depending on the nature of the new spot you live in, it's gonna, you probably have to take over the cleaning expenses as well. I've included that. Most leases are triple net, so you're probably gonna have to take over utility expenses as well. And there are other common area expenses that I've incorporated into the budget. Largely unknown at this point, but to be prudent, I've included it in the budget recommendation. The office tech support is essentially about the same as current. Again, ESS has a separate computer support agreement with a company called Owl Solutions. They're based in Hiawatha, but they have a Des Moines office. We did choose them through a competitive selection process, and I anticipate that that service provider will continue and follow you to whatever the new location is going to be. ESS is the proud leaseholder of a multifunction printing device, and it is out in the hallway if you want to inspect it. That will continue at the same rate, and there will be some moving expenses associated with that, but otherwise it is yours to continue using. There's no change in miscellaneous expenses in this budget. Okay, moving on, and I'm going to say this generally about the administrative staff positions for the communications coordinator, account manager, and the customer service coordinator, and as well as for the accounting coordinator. And that is that basically we looked at what the actual cost was in October. We had 3 pay periods for all the staff, and we said, okay, what was it? Pretty close to what it was with the previous provider paychecks. We just moved that over. And I would also just want to note that last year in May, most of the staff did receive a compensation adjustment. I did not include a compensation adjustment in May for the staff in this budget. So that is sort of an unknown that is out there, but I think your new director needs to be involved in that discussion. And so I would envision that in either February or in May, more likely May, there would be some review by your new leadership about what to do with that. So I did not incorporate any compensation increase for any member of the administrative team or even the development team, current development team, in this budget. Okay, under marketing and communications, this is about as bare bones of a communication budget as we've ever had. The main thing is to maintain two pieces of software, which would be MailChimp for bulk email, and then we're retaining a license to use SurveyMonkey in here. There are some other minor ones like Canva, and I think we have a single license for Adobe Acrobat, and because of our staff configuration. So the things that fit under education and outreach are kind of bare bones. We have allowed for participation in the career conferences of two per year in this budget. I'm anticipating that I would go to the one in the spring as sort of my swan song, and then the new director would be going to the one in August. So that is in the budget. And then I think the other thing that I would mention is that there's something not in the budget. It's sort of kind of sad, but we are releasing our membership in MISMO. That is roughly a $4,000 to $5,000 membership, and I would encourage the future leadership to revisit that and get me engaged with them, because there really is only one national standard setting body for property records anymore, and that's MISMO. PRIA doesn't really do that anymore. They haven't updated anything in years, and basically they said we're gonna let MISMO do it. The future property record standards is MISMO. So at some point will become relevant again, and I would encourage you to stay connected, but it is not in this budget for the first time in many years. Okay. I think I've kind of generally talked about the account manager position and the account coordinator. And now I'm moving down to the accounting coordinator, and that's also basically kind of status quo. And about it for that. Technical lead, I've done the same thing there. I have used actual numbers to estimate the cost for the technical lead position and the senior developer, Mona and Nancy. And as a benchmark, I'm using the cost of Nancy's position as the estimated cost of the third developer position. I don't know that it will end up that, but I project that, it would be no more than that, okay? Depending on the hiring decision that gets made. Forward file reduction is just a slight increase compared to the current year. Monthly estimate of $5,500 for that. Data center and hosting services. Just to remind everybody that we now no longer own any equipment. We are in the cloud. And it is in the cloud that is hosted by Light Edge out in Altoona. And our cost is about $8,200 a month. And I would project that that will continue for a while. But I also have noted in my budget memo that at some point that is going to go up. Their costs, their energy costs, the cost for equipment that we are using is going to go up. And so we just need to be aware of that and prepared for it when the time comes. Domain registration costs are about the same. And then moving on to the software licenses, really the biggest items are ActiveSoft. The Prism software is the image viewing software that we use that is very important to the e-submission process. The DB2 license that is projected to go up a little bit. And then the other notable thing would be that we are, trying to migrate away from SUSE for our Linux operating system, but it's going to take time to finish that job. So we are projecting some license fees for that to continue into this next year. If you had any questions about any other particular item in the budget under those software licenses, I would be glad to answer them. But basically, it's status quo in terms of what we're using, maybe with some inflationary increases. I would be remiss if I didn't say there was one outlying potential concern, and that is Accusoft, which is the publisher of Prism, was recently acquired by another company. And anytime that happens, then you're waiting for the other shoe to drop about potential fee increases. And it's something that we could not easily switch. It's just something that will be on in that memo to the next director somewhere to watch out for things. That's one that I'm gonna be putting on that list. Okay, we're almost done, with the expense side. I'm down to local maintenance expense. We talked about that up in revenue. So this number is the same, roughly about $283,000 expense item for that. I do anticipate that our bank account analysis fees will go up a little bit. The gateway transaction fees have also kept fairly stable, except we do anticipate that our point of sale costs are going to go up. There have been some changes made in merchant rules. We aren't sure what the impact of that is going to be. So I have built in a $10,000 increase in that. But the main thing you need to keep in mind is that, our merchant fees primarily are driven by volume of transactions. So when transactions go up, and the more transactions we do, our merchant fees go up. If transactions go down, they go down with that. So this is more of a cyclical estimate than it actually is a cost estimate. So all said, total expenditures are projected to be $1.917 million in 2026, compared to $1,608,000 projected at the end of 2025. This was Natalie's question to me. Oh my goodness, is it really going to go up that much? And why is our net income going down so precipitously? And it primarily has to do with filling the developer position, having a slightly more expensive director than what you have today, increased costs associated with leasing property, and generally inflationary expenses. That's really why the number is down. So the projected number for net budgeted income is 29,792 compared to how we're ending 2025 with net income of $316,000. I would say in terms of putting the expense side together, that I followed similar practices to what I've done in the past, and that is to mostly estimate on the high end on the expenses, and then be prepared to be pleasantly surprised, as we go through the year, because we're managing the budget. That's sort of how this is put together. So I used a very similar approach on the expense side, but I'm not going to over understate it. I am having a slightly more optimistic view on the revenue side, than I would normally do. But I do think this is a doable, manageable budget. And it is based on current law. Whew, I'm sorry, but that is the 2026 budget. I'd be happy to answer any questions that you have.
I have one question, Bill. So is Slack a communication channel for you guys?
It is.
So I'm just questioning why we're paying for that if we have like Microsoft Teams. I'm assuming we have that capability to be able to chat internally. Do we need both?
Well, you know, our Microsoft costs are not that high. And it incorporates a lot of things, including our office software that everybody, particularly the administrative teams use. We highly use Slack for communicating internally.
Do you guys prefer that over using Microsoft Teams?
I would say we do prefer using our text messaging over Slack compared to Teams. That doesn't mean that we can't be reformed, but I think that is a very heavily used tool that we have.
On a given day, if you were sitting next to one of us, because you can opt to have a sound when there's a message. It's a constant ding as we're working through something. I guess we could get up and yell up and down the hallway. And we do that, you know, Phil will say hallway huddle and then the dings stop for a little bit, but we do use it a lot.
I know it's not that much for Slack, it doesn't look like, but it just feels like it's a duplication of, you know, paying for communication. But I also understand that you guys need to be happy with what you have as well. So.
Yeah, I would just say we get paid for the license through July of next year. Maybe that's something that we could explore because that renews.
Oh.
Before that renews.
Why did you take out Mismo, Bill? Why did you take out Mismo?
Because it is, I'm just gonna characterize it as a dream that we have wanted to. A number of years ago, we went to the expense of you know, hiring a Mismo expert to help us develop a strategy for putting a different front end on our land records so that the mortgage industry could communicate directly with us using that standard. You know, in terms of other priorities, we just haven't been able to get to it. I'm a big supporter of Mismo. Mismo is huge. They're essentially the Mortgage Bankers Association. And so I'm not saying never again, I'm just saying, and I communicated with the administrative staff of Mismo to let them know, and they're sorry to see us go, but they also understand, and they're positioned to welcome us back in whenever we can do it. The advantage of being part of Mismo is that the membership includes a license to use their software. Okay, we're not quite ready to do that. We have a lot of other bigger fish to fry. This seemed to be the right time, and I think your next director needs to make that decision, not me.
Thank you.
I just had a question, some numbers that just jumped out. I don't know if this is an anomaly, but this is back on page 2. Under the office operations, the office tech support and printing and copying for April are more than the rest of the months. Is that by design or is that?
Right.
1,000 and then 340 to 540. I just didn't know if that was
That is probably just a typo.
that finger. That's what I wondered.
So, what I would recommend when a motion gets made, to just have a footnote to correct the. Do you know of anything?
I think it was from when we were planning, because that's when we're gonna have to move the printer, but that expense actually ended up being higher after we called So we were just gonna do those moving expenses out of the reserve probably when we know better of how much that's actually gonna cost. I think we just accidentally left that in there.
Um,
Yeah,
Thanks, Travis.
that was an oops, I think.
Yeah.
Yeah.
Somebody include that in your motion.
Wait, I think we did leave tech support higher in April, thinking they would need to help us set up a new network potentially. And then, but the printing and copying should be at 340. So I think the 1,000 stays in office tech support
Yeah,
and 340 in printing and copying.
yeah, the tech support definitely in that 1,000 was there. Just to
Yes.
continue.
Yep.
My question would be, I guess, just the change that it shows for, I guess, the team. Just the change looks high. Can you explain that? I assume it's just the insurance and.
It's a product of benefits selected.
Yeah, that, I mean. That's one of those where I could literally say. Decisions were made, we had real numbers to look at after the benefit elections were made. And it's not a policy change, it's just is what it is.
And how many hours a week is the communications coordinator based on? That?
She is at 58 hours per pay period. Any other notes in the chat pad?
No, we're good.
One more question, sorry. As for the benefits, is that later on in here? Or like insurance wise, like what percentage? Is paid by ESS versus the employee?
We pay 100% of an employee equivalent plan and 60% of any other plan. So family or employee plus child or employee plus spouse is 60%. And then if you're an employee only, it's 100%. What you're gonna see later on the agenda is the 401k plan.
Any further discussion on the calendar year 2026 budget? Or if there's a motion,
I've seen a lot of these budgets over the years and, I just wanna say I appreciate how, Phil, how you've handled these over the years. You've always been conservative. You've never left us in a high and dry place or anything like that, so, I appreciate your leadership over the years on this, and, I would make a motion to approve the calendar year 2026 budget.
With the amendment.
With the amendment to the printing.
That
Uh,
you got.
that I, apparently that I caught, all right, there we go, there's my motion.
Thank you.
This is Jamie, I'll second that.
okay, we have a motion and a second. Is there any further discussion? Hearing none, I will call the vote. All in favor, please say aye.
Aye.
I,
Opposed, nay. Motion carries and we will continue on to Brick Gentry.
Okay, I'll just make a quick introduction. Steve Brick and Paul Gray were at a prior meeting. I would say that we have worked with them for a number of years. I asked them to prepare a representation letter. These are typically considered at the November meeting, so we're following past practice. And the cost per month and annually is being kept at the same rate. I would invite Paul Dre, who is with us, if your microphone is working, feel free to make any additional comments that you might want to make.
Thank you, Phil. Appreciate the opportunity to be part of your meeting and to be here to express on behalf of Brick Gentry. We have really appreciated this relationship with you and working with you, and especially closely with Phil over the years. And we look forward to hopefully the opportunity to continue to work with you. As Phil said, I know Steve and I were there in person at the last meeting. I apologize. Sometimes my lighting is bad, so some people say I look like I'm in the protection program of some kind. That's not intentional. I'm not sure of the lighting, but I apologize for that. I did want to take the opportunity to thank you for the opportunity to again present and to hopefully continue our relationship working with you. I know there's going to be an interesting transition and some issues potentially with change of leadership going into the next year. And the issues continue to be there. And so we would look forward to the opportunity to continue to work with you. As Phil mentioned, we have kept our rate at the same rate as we had in the past year. And so if there's any questions, I'd be happy to answer those. But again, thank you for the opportunity to continue to work with you and going through 2026. Thank you.
I'm just going to add to this to say that I do think it is a good idea for continuity purposes and historical knowledge to continue to retain Paul and Steve. And Steve was one of the principal authors of the amendment to the 28-year agreement. They have knowledge about a lot that we do. I have typically followed the practice of consulting with them when we do significant or substantive contract agreements or amendments to contracts and use them in that way, but I have not been one to feel the need to have my attorney sitting with me at every meeting. I just think that's a waste of time and energy and money. So I haven't done that. So Steve and Paul haven't necessarily been as visible to you, but I have relied on them a great deal. I think how that is handled in the future is going to be up to your new director. Okay, so give that person the opportunity to have that continuity, make up their own mind, and then maybe when November of 2026 rolls around, you might receive a different recommendation. And that's up to them. But I do recommend that you continue on with this through 2026.
Okay, is there a motion to authorize Phil to enter into this contract as on page 26 notes, or other questions if there are prior to that?
This is Jamie. I'll make a motion to approve the engagement letter with Brick and Gentry.
Second.
Okay, we have a motion and a second. Is there any further discussion? Hearing none, I will call the vote. All in favor, aye.
Aye.
Any opposed, nay? That motion carries. And we shift into Connectify.
And I'm going to defer to Samantha and Lisa because they had done most of the work in supporting the transition. My introduction would be that at previous meetings, you gave your approval to make the switch to Connectify and to enter into the base agreements with them. But at the time, the 401k transition was not completed. That is, the plan for it wasn't completed. And when we looked at it, carefully determined that no, we couldn't go ahead with it without review and action by the committee. So we're here today to give you more information about that, so that you fully understand it and can make an informed decision, and defer to Lisa and Samantha.
Okay, so the 401k is the last part of switching over to Connectify that we still need to take care of. Before, when we were with Paychecks, we were with Transamerica, and Connectify uses Emeritus. We gave Connectify and Emeritus the SPD that we had configured with Transamerica. So what you're seeing here, all the details of the plan is the exact same thing that we had with Transamerica, and I believe really for what we had for years. I don't think it's ever changed. And then if you move on to page 30, the vesting schedule. So ESS matches up to 3% of the employee's wages if they contribute 3%. So if they only contribute 2%, then ESS will match that 2%. However, the employee does not become vested until they reach at least 2 years. So if they reach at least 2 years, then they get 20% of the money that ESS is contributing.
If they leave.
Yep,
if they leave.
Yep. But the portion that they invest is always fully vested, and then that that percentage continues to get higher until they reach 6 years where they would be fully vested. I believe Phil did include the 3 documents in the following pages for further review, but I'd be happy to answer any questions.
Really no change, it's just a matter of finalizing.
Yes. And if anyone wants, I can provide the Transamerica documents in a separate email. It's probably, it's very long.
Make a motion, if you're looking for a motion that we approve. Connectify retirement 401k plan. This is Jolene.
Is there a second?
This is Natalie, I'll second.
Okay, we have a motion and a second. Is there any further discussion? Hearing none. All in favor of the motion, please say aye.
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 Opposed, say nay. That motion carries, and we'll go to Linux Migration Independent Contractor Agreement.
Do you want to stop?
Okay.
Do you guys want to stop for lunch in the?
Well, let's go ahead and do this one. Can I just ask a question? Did you share with the committee the planned effective date of the 401k?
It was included in the details that were included in the packet, so.
Okay, I would just in summary, FYI, say that the effective date with this adoption would be December 13th, 2025. And it would be effective in the first payroll on December 26th. So that's when it will actually go into effect. Think about this, Anne, in terms of when you would like to take a break, because we do have a little bit of work left to do. But I think we can do the and we can do as much as you have patience for. But the technical service agreement is fairly straightforward. It is essentially a 3-month extension with Kelly Wallace. If you went back to the budget, let me just pull that up. The technical consulting, the cost in the budget which you approved is is a reduction from where we started out. It would be $2,100 a month. The terms do not change. It's still $70 an hour. You know, I think from my perspective, hopefully Myrna, until we can get this transition completed by the end of March, but I felt that it probably should be left up to the next person to decide whether or not to continue it, if it was necessary or not. And so that's why I didn't include it in the budget beyond March, and that's why I'm recommending that the extension only be through March 31st. I would request your approval.
Is there a motion?
This is Jamie. I'll make that motion to approve police contract extension.
Travis will second.
Okay, is there any further discussion? Hearing none, all in favor of motion on the floor, please say aye.
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 And any opposed, say nay. That motion carries also. So is this a logical breaking point, Phil, or do you want to keep pressing on, or, I mean, all I have is leftover pizza, so it's not really enticing. If I was eating Palmer's Deli, I'd say let's stop now.
I defer to the wishes of the committee.
Break. Okay, it's 11.
How much time do you want?
12:10? Sure. Okay.
20 minutes?
12:15?
Okay, welcome back. We will resume our discussion at the cost sharing credits and maintenance amendments on page 82.
As a recording, Jody.
Yeah.
Okay, if you can hear me, I'll begin.
Push on Zoom at the bottom. Oh, it's right there.
What?
Double click on that.
Okay, there, we're back. Thanks, Mel.
Are we all set to go?
Yes, Phil, waiting for you.
Can everybody hear me okay? All right, we'll begin. So I am on page 82 of your packet. It is a memorandum that covers two topics. They are somewhat related to each other. The first topic is how do we handle the maintenance sharing and the maintenance cost sharing credits in this new cycle? What is different, as we talked about earlier, is that the maintenance cycle now will begin on January 1 instead of July 1. This is to better align with our budget cycle. It does not necessarily align perfectly with the county budget cycle, but it does align with ours. One of the things that has traditionally happened is that after the first of the year, we will go through the calculations of the maintenance cost sharing credits with your local service providers, and then we will put it on an agenda, oftentimes the February or the May meeting. And after the calculations are done, we will then ask the ESS coordinating committee and also the finance committee, subcommittee, to approve cost sharing credits. Well, that will be more difficult this year because the maintenance period begins January 1, and the regularly scheduled ESS meeting would be in February. Okay, so the service provider will be sending us their invoices in January, And we're gonna need to be asking the counties to contribute their funds to the cost share in that same time period. So the usual prior procedure of doing the calculations, waiting a couple of months, having a meeting, getting it approved is not gonna work so well. So what we are recommending this going forward is that we ask you to approve the policy. That is, we ask you to approve how the credits will be calculated in advance so that we can just do it as a staff action instead of taking the actual numbers and bringing them before you for approval. So the procedure that we have followed in recent years is fairly straightforward. In the policies and procedures, since it was originally established back in 2014, the cost sharing credit program, that is, we will use a formula that basically says, here's what the statewide e-submission ratio is for everybody. And then we calculate the same thing for individual counties. And we budget so much for the cost sharing credits, which by your action earlier this morning, you approved budget of $140,000 for those cost sharing credits to be spread across the participating counties. There are 88 participating counties because Fiddler did not choose to enter into a maintenance agreement. If they came back in, then there would be 99 counties. And I'm not making any commentary on that. That is just how the math works out. So what we would do is the formula provides that if you are a county that exceeds the statewide average, then you would get a cost sharing credit that is a little bit higher. And if you were below the average, it would be a little bit lower. And that is determined by the ratio of your e-submission percentage compared to the statewide average. That's just how the math works. And we've always run the formula that way since the very beginning. It's a combination of trying to help share the cost of the maintenance of your local service providers and maybe providing a little bit of incentive for folks to promote e-submission. The variation came into play when we had more abundant resources, I'll say it that way. The ESS committee on a few years said, okay, let's just make sure that nobody gets less than they did last year. And that was in place for a period of several years. In addition to that, if there was any money left over compared to the amount that was budgeted. So we ran the formula and we didn't spend all of the money that was budgeted. The committee was given the opportunity to say, well, how about we give X number of dollars per county to add to the credit, just to divide it up and make sure it all got spent. And that was also a part of that recommendation to establish the cost sharing credits. So we haven't had the resources to say, hey, we'll make sure you got as much as you got last year for several years now. And I'm not recommending that we reinstitute that at this point in time. But we could implement a method for making sure that all the money gets spent. So the recommendation would be to authorize the staff to use the well-established formula to calculate the distribution of cost sharing credits, and then to direct us to using the remainder of the money to add to each county's cost sharing credit enough to supplement that on an equal basis per county. That way, we're following the procedure that we have been following. We just aren't showing you the numbers up front because we haven't calculated them yet. So in January, we would run the calculations, we would see how much of the $140,000 would be used at running that formula. And then any money left over, say $10,000, just for example, we would divide that up by the participating counties. And if you look at the bottom of page 82, that would give you an example of how that would work, meaning that he would run the formula, it would distribute $130,000. And in that particular case, we would be able to add $113 to the credit for each of the participating counties, which in this case would be 88. So instead of waiting until after the fact and all the calculations have been done, we are just asking you for permission to go ahead and implement that policy. And then we'll report back to you later what the results of it were. And that way we can get it done in January in time to pay the service providers and in time to put the invoices together for the counties for their cost share. That's what we're proposing. That's the first part of this memo. The second part of this memo relates to an extension of the deadline for the service providers to conform to the new county upload API. Their current contracts provide that they are to have that implemented by March 31st, 2026. We had our quarterly meeting with the service providers several weeks ago, and we said, we've been looking at all of your activity, and we know that you are not going to meet the March 31st deadline. So let's just be honest with each other about that. And we're proposing to extend that deadline instead of March 31st, 2026, to set it as a deadline of June 30, 2026. And that encourages service providers to respond and get their work done. As a team, we have been trying to provide supplementary information to the service providers so they have a better idea of knowing what they're supposed to do. We haven't had any service provider come back to us and say, oh, that's too complicated, or, oh, we think this is too difficult. They've all said that they can do it, the ones that are participating. And so we would propose, as we told them we were going to do it in their quarterly meeting, to just simply do this 3-month extension. So in your packet on pages 84 through page 90, through 84 through 95, we actually have the actual amendments that we drafted up to do this 3-month extension. This amendment for each individual service provider has been provided to them in advance several weeks ago. So they know this is coming. Nobody has expressed any disagreement with it, and we're prepared to move forward. So we're asking you to do 2 things in this memo, which you may do together or separately. One is to authorize us to do the calculations as I described to determine the cost sharing credits in January of 2026. And the second thing is to authorize me to proceed with the execution of these contract amendments with our service providers. I would be happy to answer any questions.
So how long realistically, Phil? How long realistically can we keep pushing out the API? Like, I feel like this has just been ongoing forever.
I think the service providers can do it. I'm sympathetic to them in the respect that, you know, we all have multiple priorities. We're all trying to get multiple things done. And I don't want to be unreasonable about it. But at some point we have to draw the line. And we pretty much have the service provider done with the decommission API, except for one service provider. And I think they're going to be done fairly soon. And, at the last quarterly meeting we had with service providers, there were several service providers that expressed appreciation to us for the additional information that we've been giving them, so they understand what they have to do. How long should it be stretched out? Well, we've been stretching it out for several years now,
Right.
actually. But at the same time, contrary to maybe some opinions of some people, we do try to be reasonable with them. And the real deadline isn't how long do we wait for them to do it? It is, at one point do we say we're done supporting the other API? That's the real question. And we'll try to be collaborative and get it done as soon as we can. But not everybody thinks that we should be bullying the service providers, and we don't. We try to cooperatively work with every service provider. So I'm not gonna say it won't ever be extended, and this is it, never again. I'm not saying that, but I do think it's reasonable and realistic to extend it for 3 months and see how much we can get done.
Okay.
Did that answer your question?
Yeah. Seems like it's about forever. Yeah, it just keeps dragging out.
Fascinating meeting that way.
Wait, you listen to that?
That conversation is all
Well,
blurred.
most of the service provider calls are monologues by me because they don't want to talk in front of each other.
Getting all that paper form, but yeah, it was.
They don't even type a private message.
Really?
Well, I'll make a motion to authorize the staff to calculate the 2026 cost sharing credits for January 26th, and along with that motion, make the proposed contract amendments.
Second.
Jolyn seconded.
Sorry.
Okay, so we have a motion and a second on, is there any further discussion? Hearing none, all in favor of the motion, say aye.
Aye.
The people online are asking you to speak up and speak clearly. They're hearing they said blurry. Okay, that's all I got.
That
It was like a lot of people were talking at once and it just blurs when that happens, so. So is there a group of people there saying aye? Cause all I heard was Mel.
Yeah.
Didn't
They
hear
all
it.
said I in.
Okay, and any nay? Okay, motion carries and we'll move on to ILR WordPress landing pages update. Page 96.
I'll give a quick introduction, but then I'm gonna turn it over to Kristen. And Kristen, you may have to move or something,
Sit here.
so that you can be heard. I'll start with the fact that, I think for a couple of meetings now, I've conveyed the idea that with the positive economic and budget experience that we've had in 2025, that it would be possible to move forward with some development projects, depending on the wishes of the committee. And I know that there have been some hesitancy in moving forward with things like the notification system, just given the uncertainty in the environment at large. So we have had some internal discussions as a team to say, well, what else could we do that would not be considered controversial or be up for debate? And one of the things that we've come up with is that the basic landing pages of the Owl Neighborhood website have not been substantially updated since 2019 when they were initially created. We've made some changes, some modest things, things like the forms we've made some adjustments on, but the basic structure and the operation of the web pages themselves have really not changed. And so Kristen and the rest of the team have discussed it, and I have shared, you correct me if I misstate this, but I basically said to Kristen, I agree that we need to do something about it. We don't have the bandwidth to do a full-blown RFP right now. I think we need to do some research and figure out what's possible before we move forward. So I authorized her to do an RFI, request for information, and to go out and solicit ideas and input from service providers who do this kind of software development work. And I asked her to communicate with them and meet with them with the understanding that we were not ready to make a buying decision, that we would have other processes to do that later. And then, so that has been completed. The materials in your packet described our process that Kristen went through. And then Kristen and I, other members of the team, reviewed it and determined that, in fact, we would be ready to move forward with next steps on this. The general process would be that if you were to be amenable to this idea, that we would form a selection committee to work with Kristen and maybe Lisa and other members of the team to initiate a selection process to choose a vendor that would be able to carry forward with this work. And just to be very clear upfront with this, if you go to, I have to get to the right spot here, the memo. So if you look at Kristen's memo that is found on pages 107 and 108, basically what I'm asking you to do is authorize us to allocate it up to $50,000 to implement this project under your authorization for me as a project manager to carry out this project. So with that introduction, Kristen, what additional explanation would you like to provide?
Yeah, just to reflect what Phil was saying, you know us, we're very detailed and thorough in our research and reports. I contacted several web developers in the area. Iowa/Des Moines is really lucky in that we have some great organizations around here. Some of the some of the companies that I have in the memo before you have some smaller teams. One of them has an account with FedEx that runs their website. Another one is a little bigger and they have a lot of other big names. But I came down to these three because they were the most responsive, the most flexible, understood our needs to stay within WordPress since that it is connected with our CAS login system. And before I get into too many details on the logistics of this, I just want to go back and say that when anyone has a question about Iowa land records or even recorders and what we're doing, they go to Google and they end up on our website. And right now, our website should be a great resource of information. We do have good things on there, but it's difficult to find. And we have access to free insights for how people use and view our website. And they're not staying on our pages for very long, which is not a great indication that things are working how they should be. And every 2 to 3 years, businesses update their websites. And if you think about 2020, which is 5 years ago, so much has happened since then. And our website update hasn't happened since 2019. So we went through and listed some very specific things that we wanted to have out of this project. And I can do a lot for editing content, the team can do a lot, but the pages need some development restructure that we just don't have. So that's where we kicked off the request for information. Have a lot of details in that packet that specifically request things like what more could we do to have search tips available on our website? What more can we do to make more relevant training content for the different kinds of people and industries that we work with? So this actually feels like a very condensed version of all the work that was just done looking into this. And I really do think that these are the best three organizations to work with to complete this project. And I have confidence in any of these teams to get that done for us. And I guess today really what we're asking is your approval to move forward with the project and to form a small working group to help choose which one we're gonna go with if we move forward with the project.
I'm gonna go one step further than you did and just say that the intent would be to actually create some structured evaluation criteria that would be used by the working group. Explore, we've done this before. We've been through a process like this to choose our point of sale system. We have done other procurement activities internally where we established a more objective structure to help make the choices. And we've had instances where we've had a combination of staff and recruiters participating in that selection process. And without being too bureaucratic, this is something that is very doable, I believe.
Was this in the budget? Is this in the
Is this
budget?
in the budget?
No, it is not. I am proposing to allocate resources from the software development reserve specifically for this purpose. So in a manner of speaking, it is, but it's not officially part of our P&L budget, but that's what the software reserve is supposed to be.
So you feel this would be something, I guess, the next project over a notification system, and why is that?
I don't think it's either or. But this one is not really subject to a lot of discussion. It needs to be done. It's a matter of fact type of thing. And I am aware that there is a difference of opinion among recorders about how best to move forward with the notification system. We have done a design. I am confident that we could do that design, but I also know that some recorders are still interested in seeing what their service provider can do. We had a very productive discussion just a week ago, or maybe it was this week.
It was this week.
With the representatives of Hero Solutions. They gave a very nice demo and presentation of what their product is. And it may not be the statewide solution that everybody has envisioned, but it would be doing something, right? So until there is clarity on what the recorders as a group want to do, I wouldn't say it's not a priority, but we just need that clarity. And right now it's a little fuzzy. So
are we looking at getting the clarity, I guess? What? For a notification system between the reporters. I know it's been discussed for a long time, a few years, if not longer, and it keeps getting kind of pushed back. So I think, I mean, I would like to know then, do I need to go on you know, as my individual county and start planning for this, cause it's been a few years. I just would like, I don't know how everybody else feels, I guess, about it.
So this is Jamie, I honestly don't know where we go from here either, because we did vote on that as an association, and since then, people's viewpoints have changed substantially, and not everybody is rowing the same way on that. So I think we're gonna have to bring it back up to the association yet again. And
Things keep
see,
changing in our world, you know, we got the Doge report. So where do we spend money? Maybe we can't spend money because we might not get a fund increase. Do we have the money? Yeah, there's so many variables. I think that's why there's a lot of uncertainty. With regard to this topic, though, on the cost share or on the ILR WordPress detail, I would strongly support the update of our website because that's our face. And if, as she mentioned, thank you, Kristen, for telling us that people don't stay long, and we want them to stay because we want them to use our system, right? So that's how we grow ourselves to some degree, or make ourselves relevant. So I would be very much in support of improving the website. Other
This is
thoughts on the
Stacy.
website?
I think this is Stacy, and also there's some ADA compliance things that have to be done by this coming spring. Is that when?
Yeah, April.
So that adds another layer of timeliness. I don't know about you as a recorder, but I hear no one knows how to search the search tips. That's the biggest thing that we take a lot of time in our offices to show them how to navigate, and it's different for every county, really. I mean, so.
Well, you can refer to us. That's what we're here
Sure.
for.
Yes, exactly. But I think with the ADA compliance, we're having to do a lot of stuff, with our website and so I think this is timely, but I would really like to see us go as an association to find out where we're headed with the notification. I don't think it should be this or that. I think
I
we
would
have.
like to be clear about that.
Yeah.
This is a reasonable amount of money to get something done that really just needs to be done. Not really, I think, a policy discussion associated with it. Whether or not we are really urgently in need of addressing the ADA issues or not is sort of, maybe it's a priority, maybe not. But the overall thing is that it does need to be done. I would also tell you, and I've said this in prior meetings, that the resources are in place to move forward with the construction of a notification system within ILR to do the things that we've described. We have some preliminary cost estimates that I would say put it in the range of $200,000 as cost. That again, I would recommend taking it out of the reserve fund to do that. My qualification is that given the turmoil in the universe right now, in terms of proposals in the legislature and uncertainty about what happens with the fees and so on, and I observe that there is difference of opinion among recorders about how to proceed. Jamie kind of pushed me a little bit after the demo that we did, because does this clarify things or does this muddle things? And I can totally appreciate that. I am confident that if you decided as a group, as a full group, to move forward with having us implement our own internal notification system, I know that we could do that. I know our developers and our developer partners would be able to do that. I know that it would be focused on notification services, not on so-called just fraud prevention. But I also have to acknowledge, just based on the demo that we saw the other day, that we could work with one or more developers to subscribe to a service instead of building our own. I know that we can do that. I personally, being the short timer that I now am, think that it would be better to build it ourselves because it becomes part of your infrastructure that you can build on in future years. And you can't do that with somebody else's property. But as I shared with Jamie, sometimes you don't get to choose that. Sometimes you have to do the best you can with what you got. And is doing something like that better than doing nothing, which is what we're doing right now. So I don't believe it's either or, but the either is, you know, you want to build or buy. And I think you could go either way, honestly. You know, I asked a question, well, if we chose to go with this particular service provider, how would the other service providers feel about that? You know, there are other dynamics that are part of this as well. You know, choosing, you know, who's favorite, you know, I don't know how you answer that. So for me to be able to say, hey, let's go forward with notification or one other thing, you know, are we unified? Do we have a common opinion? And can we have confidence that everybody would get behind it? I think you have to have that discussion really before you pull the trigger to do one or the other.
Thank you. I appreciate, I guess, just the conversation. Again, and realizing that it obviously needs to go back to the association to figure out what maybe the next step is, so.
Might be
We're
helpful
ready.
to have those numbers that you were just discussing, Phil. You suggested that 200,000 from our software reserve fund might be able to get us started or build something that could
You
suffice
could-
today, but we don't
That's
know
what I'm
what the
wondering.
cost is for solutions or another
You,
off the shelf.
Okay. So Anne saying we should get the cost associated with using the Solutions Harris system and compare that to what the development cost would be with one of our development partners. But as you stated, if we develop it, then we keep it. And then as you and I talked, if we go through someone else, is it still all our data? Do they have access to all of the data? Right?
I think the answer is yes, they would have access to all of the data. Could you put restrictions on it?
Yes.
Yes, you could do that. You know, an alternative path would be, you know, I wouldn't just choose a particular provider. I would say, okay, maybe you are ready to do a new RFP. One that you just say, here are the terms, and you set up the RFP so that you're comparing not only provider A against provider B, but you're also comparing it against what your internal cost should be. And you could do that. And that might be, I don't know if it brings everybody together on the same page, but it would be one way to handle it.
Okay.
For now, we're requesting a green light to proceed with what you said.
Up at the bottom of page 96, there's 2 actions. Is there someone who would like to make a motion?
This is Jamie. I'll make the motion to authorize the formation of an evaluation committee and the allocation of up to $50,000 from the software development and equipment reserve for this project. The website.
Is there a second?
Yeah,
Travis.
All I'm getting is a blur. I'm sorry. We have a motion and a second. Any further discussion? Hearing none. All in favor, please say aye.
Aye.
Opposed, nay. Motion carries. And we move on to the Lynn County 28 agreement update. Page 109.
Of the packet. This is just an informational item. We did allude to this when we were talking about the budget and the fact that we are not anticipating any income during this next cycle from our on-demand payment services system. I've shared some information here in a memo I sent to Teresa Sackett, the deputy recorder at Lynn County, who was the point person on administering their internal online registration renewal service. And we just in matter of fact language would say that we observed by looking at our accounting system and our internal system that they were no longer using the on-demand payment service anymore. And we did communicate with the technical team at Lynn County, who we had been working with, and they did confirm that it was no longer being used. And I did have some informal communication with Teresa about it, and we kept watching it. We were originally told that, well, this was just an experiment, and then after another month or so, it looked pretty permanent to me. So I felt the need to notify Teresa that we were going to disable their credentials for using the on-demand system. But I did not go so far as to say, hey, we should just terminate the agreement that we have with them. We are not doing any harm right now. And if they change their mind, or if another county had an application and they wanted to connect it to an on-demand payment mechanism, it's built, it's ready to go. And we would be happy to do that. So in addition, Terry Stone and Charles Treff, who are part of the Lynn County internal team, they have made a commitment to share their code for their internal system, and that has been transferred to our Dropbox account by them. I have to admit, we can't really do a lot right now because of our lack of bandwidth in our development team, but it's there for us to analyze and use at some future point. And so I express appreciation to the Lynn County team for following through on that commitment, and I would thank them very much. And so this is just an update for you about where we stand with that activity. So if something reemerges, we are prepared to move forward. But if not, we understand that is their choice to make, and we move on. I'd be happy to answer any questions.
Hearing none, we'll move into the director search discussion.
Okay, thank you. So I'm now on pages 110 and 111. This is a memo from me to you about being prepared to move forward with the director/project manager search. There are two actions requested. One is to authorize the formation of a recruitment committee to participate in discussions, interviews, and possibly make a hiring recommendation. And then also I'm asking you to authorize me to use monies in the unrestricted reserve account for any recruitment activities that may be necessary. And that could range from posting ads on Indeed or LinkedIn, but it could also go up to actually seeking some professional recruitment assistance. So obviously we don't have unlimited resources for that, but there are sufficient resources in the unrestricted reserve account and the software development reserve to carry out those activities without tapping into the budget to do that. I will share with you candidly, that my recommendation would be that the officer leadership of the association and this committee be asked to serve on this committee, and specifically Anne as chair of ESS and future SCRA president, and then Natalie and Julie as other officers of the ESS committee. And then I would also add Jamie as a potential future officer, at least the four of those individuals to serve on, I think, a workably, is that a word? And a manageable sized working group to carry this forward. Then also in your packet are the draft version of the position description and the posting that we would make. And then behind that are task descriptions that could help clarify the expectations for anybody filling this job. But I think, within the next month, we're ready to actually start moving forward with the search activity, with the idea that perhaps a decision should be made by February and maybe some hiring decisions in March. I'd be happy to answer any questions.
Does utilizing those funds for recruitment, would that also include potential like hotels or flights if we need to bring somebody in?
We couldn't hear the answer to that question.
He said potentially. Potentially the funds could be used for that as well.
Thank you.
Phil, do you have an estimate of how much that may cost to potentially, number one, the recruitment of the project manager?
The low end would be in $1,000 range, and the upper end would probably be $30,000 if we had to include, use a search firm to help with something. I mean, that's not where I'm starting, but I'm being honest with you to say, for example, when we have conducted searches for software developers, we have used a headhunting firm for that. And usually they're charging between 10 and 20% of the base salary that you're gonna pay that individual. And I'm not saying that's where we're gonna start, but potentially it could get there. And that would not be my decision solely. My trusted working group would be consulted before any decisions like that were made.
Thank you.
You gotta start down this path.
Right.
To authorize the ESS coordinating committee chair and the project manager to form a recruitment committee, as well as authorize the ILR project manager to allocate funds from either the unrestricted reserve account or the software development reserve account for ESS director or software development improvement activities.
If you want to be comfortable, you could add subject to the approval of the search committee or something like that. So if you didn't want me to just be doing that, it's up to you.
Allocate the funds.
Comfortable with the way it's written.
Mrs.
First-
Natalie, and second that.
Any further discussion?
There's no other discussion, Anne.
Okay, sorry. All I hear is fuzz. It's weird. Okay, so we have a motion and a second, and I'll lift it out there for all in favor to say aye,
I,
and any opposed to say nay. Motion carries, and we move on to ESS office relocation review and update on page 118.
Just as an aside, before I jump into that, and that is that if any member of the ESS committee had any comments that you wanted to make about the position description as it's written, or if you had any suggestions for that, that would be very, very welcome. If you did have any comments about that. I would say that one of the next steps is to begin circulating the position description with some of the stakeholder groups to see if they have any ideas or suggestions. So, but I want you to know that, this isn't necessarily the final word. If you have ideas or thoughts, we would welcome them. With regard to the next agenda on official rotation, I would like to defer to Lisa and Samantha to lead that discussion.
So as part of Phil's contract, he provides office space for the ESS team. With his contract ending, there will be need for us to relocate. We did some research on this a couple of years ago and determined it would be better at that time for us to remain in this space. So the search will begin again. We'll be identifying some commercial realtors that we can talk to, look at the space, make sure that it meets our needs. We've got a list of everything that we need. I don't think we have that, what our needs included here, except for the configuration. I think we had some other ideas that were set, make sure we've got enough room for parking and what we would use for meeting, meeting spaces when ESS comes in or other committees. Looking at what the costs would be, and then determining what we would need as far as desks and other things, because everything we have currently does belong to Phil and has been furnished by him. So we'll start taking a look at that as soon as we identify a space, so that we don't have something that doesn't work in the space that we determine will be best. We have looked at some pre-owned office furnishings, thinking that those would be a little less expensive, but we will need chairs and desks for everyone. We have a couple chairs and we do have a couple cubes that we can move, but not a lot. So we've also talked about what it will cost us to move the printer. That is currently, that expense is about $800. That could go up after the first of the year. And having them move it as opposed to another mover ensures that everything is insured. So we don't want that to get ruined. We do have until the end of next year on that contract. So it's not like we can leave it here. I don't think we need any action right now, but we would be happy to answer questions if you have any.
I would just add that you intend to be assistance in this, and we have, as Lisa alluded to, we have put together a fairly extensive set of criteria that we would be looking at specifically, and also making sure that you're doing as much as possible an apples to apples comparison, so that you can make that evaluation. And I guess I would just also say that, members of this committee certainly will be consulted before any recommendation or decision is made.
We put you in like a mall or something.
What?
I said, Merle Mall, aren't they putting all sorts of weird things in there?
Well, Key Valley West, because it would be torn down, but yeah.
Mostly joking.
There are some office spaces near Millhay that aren't terrible. We looked at one previously. It
I was
didn't.
gonna say, when did you look last time?
A couple of years ago. Yeah.
But we've been kind of just looking
Yeah.
this last week or
Right.
two.
There is certainly.
Wasn't it, was this an old dolls grocery store?
Yes. It's,
It's huge.
it's enormous, but yeah, there is plenty.
Electricity would be more than rent here.
Great, there is certainly plenty of office space available in the Des Moines metro, especially after the pandemic. So many people went remote and did not return to the office. So we're gonna figure it out.
Okay.
We can give you addresses if you want to look. Okay, thanks.
I was just, you know, if any of you guys have something that you know about from your network, let us know. Ann has already given us a lead on, you know, a space that, you know, may or may not work, but, you know, at least it's gonna be on the list.
Okay. 4,200 a month, plus some utilities and.
Sorry if I'm over talking, I can't hear. Is there anything further on that topic, or would you like to move into policies and standards?
Move on.
Page 124.
All right, we have one agenda item left. We've already talked a little bit about the review that the finance subcommittee is going to be doing at their next meeting, so I will not repeat that. I guess it would not be my intention to, you know, go through the memo that you can find on pages 119 and 20. I want to maybe just have the conversation with you about where we go from here. I would say for multiple months, multiple meetings of the standards subcommittee and also this committee, you know, we have talked about you know, how to proceed if there is not a uniform point of view about what we're trying to do here. And that has been tested in recent months with the, and I'm going to preface it by saying I'm not making any critical comments about any particular person or organization, but we have kind of faced the first test of how do we proceed if the ESS committee does not have the authority to adopt policy and set standards. How do we proceed if all the service providers are not participating in the maintenance agreement process? How do we proceed if individual counties or groups of counties choose not to be part of the program? And I'm going to offer an example, and I'm not saying this is the biggest deal in the world. It's not the most important issue in the world. I'm only bringing it up for illustration. And that is indexing. In your packet, and you've seen this before multiple times, we are sharing with the local service providers the data elements that we feel are part of the expectation for transfer to Allen Lambert for the database so that the data can be searched. There are a few items in this list that are not active right now, but could be at some future point, notary information being one of those, that, you know, basically what we are saying to the service providers is, this is the data we want. Because if you looked at our entire schema, there are hundreds of other data elements included in the schema because it was originally based on PRIA standards that we really are not as interested in, or we just don't think is practical to expect, because we have knowledge that recorders don't index that information, whether PRIA included it or not. So we tried to use this list to narrow down, these are the things that we expected from you to transfer to our land records. And then for multiple meetings, we have also shared a draft amendment to chapter 2 that would say what we would do if either a service provider chose not to participate in a maintenance agreement, or if a county chose not to participate in the 28E agreement. And we tried to structure it so that we would say, essentially, well, you don't have to be a part of the 28E agreement, but you still have to participate by sending data to Outlaw and processing documents submitted through our e-submission service. We also say here that while a service provider may choose not to participate in the maintenance agreement process, they still have to meet the technical standards set by ESS when transferring data to the system or when processing documents through electronic recording. And specifically with respect to this, I'm just gonna be honest with you and say, I don't sense a strong consensus being developed around the idea that even if you're not in, you still have to participate. And going back to the data elements, we have a specific example. I'll underscore again, I'm not being critical of anybody, where some counties, after switching service providers, are now transferring a data element, in this particular case, the name of the city and town, and platted land. They're not transferring them to our land records. Most counties do, but these counties are not. And because of that, going forward, a user of our system will not be able to search using city, town as a criteria. Well, while this issue has been raised through the suggested process, which is don't communicate with the service provider, communicate with the recorder. The recorders affected have been communicated with. We have been told that discussions will be had with the service provider to see if an answer can be found. No answer has been provided back to us, meaning, and I don't know how else to interpret it, meaning maybe that there really isn't any intention to respond. So that means that even with the process that we've outlined in the revised chapter 2, we really can't perhaps expect everybody to be working together. And this process was constructed with the intent of, let's try to make it work. Let's see if we can do it. And my conclusion in the memo is, I don't think it's the answer. And I'm also saying to you, I don't have an answer for you. What it probably means is that it's just gonna, maybe it will work sometimes and maybe it will not. And honestly, I'm not gonna be engaged long enough to help you find that answer. I'll do my best before I leave, but I just don't know. I don't know if it's possible to do. So I conclude my communication to you. I was originally hired to do certain things. I was hired to build the system. I was hired to base it on standards. I was hired to promote standards. And where we are at right now, I don't know if that vision can be achieved.
There's a comment in the chat pod. Do you want to read it?
My answer to the question or comment isn't about a particular service provider. That is the example in this case, and I offer it as an illustration. And I would definitely acknowledge that there are variances in other counties with other service providers where things aren't following the pattern the way we had hoped. I can say, I think I can say this honestly, that in the communication with other service providers, there is communication. And there is work to be done. I have advocated for the past year and a half the idea of normalizing data. And there are ways that we can help normalize data. But I also think it's a two-way street. So I'm not giving Polk County or any other county a free pass on this. But it is part of the mission of what we were asked to do. And I guess what I'm sharing with you as the governing committee is that, you know, I'm having a hard time seeing where the vision is fulfilled at this point. And I have more doubts about it now than maybe I ever have. And it's probably not going to be my problem to solve. So why am I bringing this up? Well, in the time remaining, I'm going to do my best to work with the service providers in every county to do things consistently using the data element structure that we have shared, and we'll do the best we can. I don't know if we can do more than that, given the current state of things. And it's something you need to think about. And something that the next director is going to need to think about too. And I'll leave you with that. I think this has been a great meeting, everybody. I thank you all. Is there anything that is left unsaid or undone? The last item in your packet we have already talked about, so I don't need to go over it again.
I would note that Sherry was appointed by District 6 for finance for next year. It was noted that just 5 and 6 hadn't. Only 5 has not met at this point.
Okay,
In 5, we'll probably meet in December.
okay, that's fine.
I would encourage everyone to take a look at page 120 with the final thoughts, because I think that's worth at least this committee reviewing. I appreciated that aspect of this packet probably the most. So page 120, bottom final thoughts. So the next regular meeting is scheduled for February 19th in 2026. Per our earlier action accepting the proposed schedule. So is there anything further anybody else has to contribute for the good of the whole? Hearing none, meeting adjourned.
Thanks, Ann.
Thanks, Ann.
Thanks, everybody.